Question, real estate in California. What the Seriously, can someone help? What's an escrow? What's an ARM? What is an REO? What is pre-approval? Can I get pre-approval? Why is inventory so low? Why are interest rates so high? Oh, interest rates not so high? How low is low? How not so high is right.
Before you go down the road of questions, get expert help at championsofhome.com. California Association of Realtors. Who's your realtor?
Hi there, everyone, and welcome back to Real Estate, Real and Unscripted with Nicole. I'm so excited to have you here with me today on this week's episode. As you know, the purpose of my show was to bring to the market out there, to sellers, to buyers, to realtors, to everybody, just knowledge. And as such, all of my shows are tailored very specifically around some sort of micro niche that affects the real estate industry. So we're doing a lot of interviews on financing and every single type of loan and consideration from that respect. And so today we are going to be discussing a loan product that has had a lot of bad rap over the years. And I want to dispel some of those myths and some of the things that people don't know. So with me today, I have Marty Sidman, who is like the reverse mortgage guru. He has been doing this for a very long time. He is with New American Funding, and that is his specialty, reverse mortgages. And I love the amount of knowledge that he knows. He's actually got a class that he got approved by the Florida real estate board, or I don't know, for the CE credits for realtors, for CE credits. And so as a realtor, you can take some of those credits we need every year and take his class and learn. And we have, a couple of them scheduled. But the purpose of this show is to really dig into what is a reverse mortgage. It's not just the ones you've heard about over the years, reverse mortgage for purchase. There's so many different things out there that people don't know about. So I'm really excited to have you with us here today. Thank you and welcome. And I really appreciate the time and the nuggets that you're going to share with everyone.
Appreciate the time that you're giving me.
Awesome.
Thank you, Nicole.
So tell me a little bit about yourself. What brought you to the world of financing? What maybe took you into specializing in specifically this, reverse mortgages? And the last part of it is I'm very big on changing our industries that we're in and making them better and stepping things up and really being different. So what, round that off with what makes you so special? What makes you different?
Well, I started out in commercial real estate in New York and Connecticut, doing commercial real estate, representing tenants, retail tenants in their expansion program. And I was doing that for about 30 years. And we moved, both my wife and I moved down to Florida about 18 years ago and was looking around for a position. And I thought that the way I should go is into real estate. And then a friend of mine asked me to go into mortgage business. And if I was going to go into the mortgage business, I wanted to specialize in an area that I did some research on, which was reverse mortgages.
Oh.
I saw that there was a need for it, and at the same time, this was created 40 years ago, and very few people know about it, but they see it on TV as an advertisement.
Yep.
So basically, I wanted to get into it because whoever I spoke with really knew very little about it, including the mortgage brokers, mortgage loan officers of different companies, and realtors.
Yep.
Basically, realtors in today's world, about 28% make money. The rest do not. They hold their licenses. At the same time, they don't realize that there are other programs out there that they can utilize to be able to sell a home, for people to purchase a home, to people to refinance a home. And the reverse mortgage program is something that I thought would be a great asset for someone to know.
So you got into that. That was your thing from the start.
Coming down to Florida, that was my thing to start. My background is really commercial real estate.
Right.
And as I say, I traveled all around the country representing tenants in their expansion program, retail tenants in their expansion program. You know, when I was asked, when I came down here, the friends that I had that was in the real estate business and mortgage business were telling me which way to go, and I realized that they left out reverse mortgages. And I thought that there was a need for that.
Awesome.
So that was the reason why I really started to go on into that. And at the same time, recognizing the need for the seniors, since I moved into an over 55 community.
Yeah.
And talking to the people that were living in the community, realized they knew nothing about a reverse mortgage. So that was really the catalyst that got me into this.
Awesome. So what would you say makes you super special? What do you think is your...
I listen to the client.
Mm-hmm.
What does the client really want? What are they really looking for? We gave a CE class, you and I, a week ago.
Yeah.
We had 10 people in the class. And at the same time, these were people who are realtors that take about maybe 5 minutes a year in their continuing education course to keep their licenses, but knew nothing about a reverse mortgage. They didn't realize that the reverse mortgage was available for purchase.
Mm-hmm.
They only think it's for refinance.
Right.
So when it came down to it, even the questions that were asked to us at that particular seminar was based upon the reverse mortgage and what it can do for a borrower.
Mm-hmm.
And they knew nothing about it.
Yeah.
And at the same time, I showed them, by just going over with examples, that they can double their commission by just listening to the client. What does the client really want when they're out with a client and they're looking to purchase? A lot of the people that are coming down to Florida are coming from up north. They're selling their homes up north. They're coming down with cash. And they always say, I want to buy a home. I don't want a mortgage.
Yeah.
The main thing is they don't want a mortgage.
Yeah.
But they're looking at places and they're in the car with the salesperson and they're showing them different type of communities in the area.
And it's like, oh, that's what 350,000 gets me.
They keep on saying that they only want to spend $400,000 all cash, no mortgage. But they're really passing Valencia and they're passing different complexes. And they're saying, what about that? And that place is worth $800,000. But they have a clubhouse. They have a large tennis courts. They have pickleball courts. Everything that they really want. But $400,000 is not going to give them what they want. When the salesperson understands what their client is really looking for, they can show them those type of homes that are worth $800,000 or more, putting down X amount of dollars, and the remainder would be a reverse mortgage. And the key is no monthly mortgage payments. That's what a reverse mortgage is about.
Yeah. So we'll dig into some of these nuances, but, what is a reverse mortgage simply and, clearly? A reverse mortgage is a loan product that is available for, speak to kind of like a...
It's started out, Nicole, as an FHA program for seniors that are 62. When this was created, it was created so that the seniors could live a better quality of life. And when they came into retirement, when this was created 40 years ago, there was not enough money coming in from Social Security and maybe a meager pension that they may have had. They didn't have IRA accounts.
Yeah.
So the government recognized that they needed something more. And the reverse mortgage was the product. It was created so that they can use the equity in their home.
Right.
And it was based upon only two items, age 62 and the appraised value. That's how it started out.
Yeah.
For both purchase and reverse.
And
So-
back when it started out, it was purchase and reverse. It started the same, both. That was always available.
Yeah.
Yeah.
But as it developed over the years, the affluent community came into effect. And anyone now in the affluent community that's over 55 and they have a home, or they're looking to purchase a home over $2 million, they can use a proprietary reverse mortgage, which goes all the way up to about $12 million.
Wow. So what are some of the reasons, so there's so many things that come to my mind as we're going through this, right? So let me stay focused. So myths, right? You hear a lot of people that'll come and they'll say, well, then the bank takes my house and they own my house and I don't own my house. And so let me put this out there very clearly to everybody. Like Marty had said, it was to give people a better quality of life, to unlock the equity in their home, to be able to use it, right? So if you were to, and you might be a regular Joe Schmo that's going to get a regular loan, right? So I like to use this comparison. If you were going to buy a home and you were 65 years old and you were going to buy an $800,000 home and you had $500,000 in cash and you were going to get the difference of that mortgage and you're going to have a mortgage, right? You're paying interest on that mortgage. You're paying the principal and interest every month into the future. The amount of interest that you've paid during the course of the duration of that loan, be it if you did 15 years or 30 years, you sum up all that interest, that comes up with a number, and you're going to have paid that, right? For that $350 loan that you took out. The flip side, if you look at it, if you were 65 and you went into Marty's office and Marty wrote this out for you and said, all right, listen, instead of having that mortgage payment and instead of having that interest that you're paying every month, you're going to get it, you buy it as a purchase reverse, and we're going to put that on the back end, and then it will then take, the interest that you will have paid forward is now sitting on the back end, right?
That's correct.
And so that's how I like to use that example, because I think that kind of helps people really realize a few different things and tie it all together. Because in that case, now you don't have principal, you don't have interest. You're responsible for your taxes and your homeowners insurance and your HOA, right?
Right.
And you've now put more dispensable income in your pocket so that you can go and travel and enjoy and whatever it is. And you have that extra money that comes your way. So the reason I'm bringing that up is because you'll hear people say, well, then they took my house. Okay, so then let's flip it around, right?
Let's stop at that.
Yeah.
Okay. Let's go back to the problems that we had in 2008.
Right. Yeah.
Okay. There are people where the house, the mortgage was had a greater value than the property itself.
Mm-hmm.
People went into foreclosure in 2008. Well, if you had a reverse mortgage in 2008, you didn't go into foreclosure.
Right.
You didn't have mortgage payments. You were only responsible for paying your real estate taxes, homeowners insurance, and homeowners association. So what you just was talking about is something that's very important, is that they didn't have a mortgage payment.
Yeah.
Now, of course, that has to be paid back. And how is that paid back? That's paid back when they sell a house, they pay off the mortgage. At no time will they owe personally the mortgage itself. This is a non-recourse loan.
Yep.
They're not personally responsible for the mortgage. The home is responsible for paying off the mortgage.
Yeah.
Now, as an example also, if the house has been in the family for many years, and the family wants to keep the house, and let's say the mortgage is greater than the value of the home. The government says, wait a second, the family wants the house. All they have to do is pay 95% of the appraised value to keep the house. The mortgage may be $500,000, but the house may be only worth $400,000. They pay 95% of the $400,000, and they can keep the house because they want to keep it in the family. It's been in a family, let's say 80, 90 years or more. But the appreciation of the house didn't really go up.
Right.
But the mortgage went up because the couple was in the house for maybe 20 years not having a mortgage payment.
Right.
So the federal government has put that in. That it's a non-recourse loan. At the same time, they're still giving the people who are going to inherit the house an opportunity to keep the house.
Yeah. And when you go to sell it on the free market, if you get to that point where you may have, and it's an actuarial calculation, right?
That's correct.
So it's based on your age, your spouse's age, if there is one. It's based on the youngest one. It's like saying, all right, how further in life are you going to live? How long can we expect you to be there? Let's look at the monthly payments. That's going to aggregate on the back end. And then how much is the house going to appreciate? And it's like, you'll see the chart, right? That it shows, all right, if you sell it in 10 years from now, they think your house is going to be worth X, but then you would have owned Y. So if let's say that, you sell it at a time where maybe the market went down or whatever might be, or you outlived and the calculation really thought you were going to be here for like 90 years and you're 107, right? So like, obviously they're not coming after you, they're not taking the house, but to dispel that like little myth about they're taking my house or they took mom's house or we owe all this money is because it's a mortgage. It's not that they took it. If you sell it and you have upside and, let's say you went into it and your mom bought it for $800 and brought 500,000 to the table, it took out a 300,000 reverse, and every year it accumulated the interest on the back end, and then she's selling it or she passed away, and now, the house is worth 900, but you owe, whatever it might be, a certain number. You may not owe more than it's worth. You may now have money you're going to walk away with, right?
Well, there's an example of that too, is that, let's go back in a little bit history. I did a loan going back to 212 with a couple. They came down from Philadelphia. They bought a home. It cost them at that time, let's say, $125. At the time that they did that, they only had to put down $30,000 cash. That was at the time of the reverse mortgage. That was the guideline at that time. Okay? Now, they were both about 63, 64 years old. 5 years later, the house is not worth $130. The house was worth $250. They called up Marty Sidman, and they said, Marty, what can we do? I refinanced them. They took out at that time $75,000 based upon the appraised value and their age. Now, they did that 2 more times. You're going to realize that they're now living in a house, fortunately in an area in Boca Raton that went up in value to $500,000. They only paid $30,000 cash originally in 2012.
Yep.
And they're still living in the house to this day, but the house is worth $500, and they don't have a mortgage payment. And they have no cash in the deal.
Right.
So they did very well on this.
Like you said, affluent people can use it as a strategy too.
Let's go on that too.
Yeah.
I did a loan in Palm Island.
Mm-hmm.
The house was worth $8 million. The people in Palm Island wanted to buy a house in Zermatt, Switzerland for 3.9. They were based upon the value of their home. They were able to get a loan of 3.9, buy a home in Zermatt, Switzerland. They didn't care what the interest rate on that particular item, because it was proprietary, was 9% interest. They said, when I sell the house in Zermatt, Switzerland, they'll pay off the mortgage. But at the same time, they were able to utilize the value of their home in Palm Island to be able to get a ski house in Zermatt, Switzerland.
Yeah.
So the affluent community has picked up on that.
And it's unrecognized value, right? So
first of all,
it's not like you sold it and had to take that cash and have it.
It's cash, tax-free.
Mm-hmm.
Whenever you're doing refinancing, any type of financing on a reverse mortgage, the money that you receive is really, tax-free. Someone who owns a house wants to do a reverse mortgage, and take money out. They could take money out a couple of different ways. They could get the money out all at once as a lump sum. They could take it out and get it on a monthly basis. They could get it on a mixture of both of those. Money at the closing and money in a line of credit.
What happens to that money in the line of credit?
Good question.
Yeah, I don't know.
I'm glad we had a CE program together.
Me too.
In today's world, it's the amount of money that they would receive, the money that was left. If, for example, they went to refinance the house and the house is worth, let's say, $500,000, and they were able to take out, based upon their age, $250,000. But they didn't need the money. They wanted to use it for home care in the future.
So it's a line of credit, effectively.
Called the growth line of credit.
Yes.
Growth line of credit is at 6.5% right now.
Right now.
Tax-free. The only money that they would owe on the reverse mortgage would be the closing costs.
Mm-hmm.
But that $250,000 over 5 years, by using an amortization schedule, will grow, not $250,000, will end up closer to $400,000.
Yeah, and so there's two
And
ways
they don't
of
owe
looking.
that money.
Right.
The only time they owe that money is if they take it out.
Right.
So it's growing along with the appreciation of the house.
So you could take something like that, right, and have that line, have it sitting and growing, and then maybe you need every year an extra $10,000, $15,000
Pay the
to
taxes.
supplement life taxes.
Pay the taxes.
Association fees went up, assessment for the roof for your association, whatever it might be. And I'm talking, pure play like townhouses. We'll talk about condos separately, but you have that line of credit. So obviously, if you were to take out that $200 all in one shot, and you're taking it and you're going off and buying another property, whatever it is,
Right.
then obviously the rate of interest on the back end is going to be off of that $250
Only on the money that you borrow.
that you're borrowing. But if you're taking that line and you're touching on it for needs as you go, it's getting interest, it's getting hit for the interest for what's been taken out.
Right.
So those numbers are going to look very different over the course and duration of the time. So as somebody who, is buying a house as well and doing it as like a purchase reverse, you're gonna have to take all that money. You're doing a purchase reverse. You have to give Joe the seller his $300,000, right? But if you're doing it on the other side of it with having it as treating it as like a line of credit, it's growing while you're using it, offsetting itself in ways, right? And the interest is going to be spent against what you're using, and then the growth is going to be spent against what's sitting on there, right? It's a pretty cool feature. It really does open up, options for people.
Well, and also at the same time, they do have an option if they wish, that if they want to pay down on a monthly basis, instead of not having a mortgage payment, they can throw money into the account that will be paying it as though they're paying a mortgage payment.
Right.
So they have their choice.
They still can do that.
They still can do that.
That's cool too.
Yeah, they have the right to do that. There are people that will look at this, if they have the right financial advisor, can say to them, look, take out a reverse mortgage. Don't get your Social Security right away. Use the reverse mortgage. When the Social Security kicks in, you can stop it and use the Social Security to live off of.
Right.
So you can blend that together, and you have to really have an astute advisor, because most advisors really don't take into consideration the reverse mortgage program. Very few of them understand the reverse mortgage program.
Right. And the creative ways it can be used.
Well, ask me that question about why don't they know about the reverse mortgage
Why
program?
don't they know about this program?
Okay, I gave a number of seminars at reverse mortgage, at financial advisors, breakfast meetings. I did it twice. And the second time, one of my friends came up to me afterwards and said, Marty, don't even waste your time with us. I said, why? You gave an example. You used that $500,000 value. You didn't use the $1 million one, but you used the $500,000 one. And they could take out $250,000 and leave it in an account and grow in 6.5% interest, whatever the interest rate at the time.
Disclaimer, yes.
The financial advisors wants that $250,000. They want to try to invest that $250,000.
Right.
On that, they got to make a certain amount of points so they can get paid.
Right.
What you're doing is you're leaving that $250 in there growing tax-free. They got to have a really good product to match up tax-free on $250. So in reality, for the only time a financial advisor is going to come to you, Marty, is when their client is in a desperate situation and when they're in foreclosure. And they know and understand, I could take someone out of foreclosure.
Speak about that, yeah. So, so you are a senior, you have a home, you are in a position where you can't afford the mortgage payment anymore, and now, but you're so rooted in your community, you're so rooted in the home. The home has size that you're not going to get if you try to, like, a lot of people automatically think, I'm going to sell, I'm going to walk away with my $150,000, I'm going to buy a smaller house, right? Like, you don't have to leave. So how can you help them?
Well, when it comes down to a situation like that, number one, let's take that $500,000 value, and they owe $125,000. And they're having a hard time because the assessment in that community has gone up. The expenses in that community has gone up. But
their insurance has gone up.
Everything has gone up there. So, but they want to stay in that community and live the rest of their life there. But they're now in foreclosure because they don't have the funds. Their husband passed away.
Yeah. They lost the income, disability, job no longer. Yeah, so many different things that come up.
Right. They're living off of one Social Security, which is the husband's.
Yeah.
Okay. But they still not enough money coming in. I can get them a reverse mortgage, pay off the mortgage that they presently have, and be able to give them X amount of dollars at the closing, maybe to repair a roof. Mm-hmm. A roof today in some of these communities,
$40,000.
About $35,000. But they can stay there. And give you an example of that in my own community, only in the past couple of years, a few of them did not really understand the reverse. They went and sold their home.
Mm-hmm.
They went into assisted living, and they didn't last too long. They're not with their friends. They're not playing their mahjong, their card games, or what have you. They're not socializing with their girlfriends or what have you. And I'm talking mainly the women. They're having a very difficult time. The change of moving from a home that they've lived in for 15 or 20 years into a, let's say, independent living or assisted living,
or a room
dramatic.
As big as this room, a suite, right? What do you call it? A small room, right? Like one room, right?
The depression sets in. So it's really very, very difficult. I've seen it so many times in dealing with seniors, because that's all I'm dealing with. Seniors. I don't do any commercial loans. I don't do any...
he ultra focuses, and I love that.
Only the reverse. Only the reverse.
So in that case, Sharon is in that situation, and she is being told, let's sell the house, let's get you into assisted, and, maybe she's not feeling that, right? So, but she's lived there for a while. Maybe she has no mortgage on the house, or maybe she had a small mortgage, whatever it might be, and has an equity in this house. And you're going to sell the house. I'm going to list it. You're going to get money at the end, and they're going to give it to you. And now you're going to have, maybe depending on the price of the house and what you sold, and if you're single, and the tax implications for capital gains, a lot of that exists right now, especially with people who've been in their homes for a very long time, and that appreciation has come. I have somebody they're going to have capital gains because they're a single person and they're over the threshold for the single person, right? They're going to be walking away with $500,000. The other $250 is going to be taxed, right? So, then you're taking that, and now you're going to assisted, and you're paying whatever every month, uprooting. but you could potentially go to someone like Marty. No one's someone like Marty. And he could run those numbers for you and say, all right, listen, you're walking away with, if you sell it, you're going to walk away with 500, you're going to move up, you're going to uproot yourself and whatever. Or we take out a reverse, maybe like a line of credit, like he's talking about, where it will grow while you use it. And he can give you a draw in the beginning for your roof and whatever it is. And then now you can stay in that home and you can take out against that line of credit money to pay for in-home care.
That's the key.
Right?
It is a home care that they need. Now, home care today is $30 in where we are in our area in, let's say, Palm Beach County.
Yeah.
Is $30 an hour, minimum of 4 hours. Mm-hmm. When it comes down to it. With a reverse mortgage, they have enough in there in the equity of their home to be able to pay that and have someone come in, 4 hours a day, help them out, and be able to socialize with their friends and live a nice, quiet, easy life. If they move into independent living, it's a tough emotional tear on them to do that.
There's a lot of different, everyone, like you said in the beginning, I listen to people, right? Like, what do they need? What do they want? What are they saying? And so one thing, that kind of comes to mind now when you said that, the children and the person.
Children want the home.
Right. So the senior, and I'm putting it out there because that is like what's near and dear to me is the seniors, because I work in that market significantly as well. And I get so many times where they'll say, but then I'm not going to leave my kids anything. Right.
Let's talk about that. That's a good lead
into
me.
What is, and I always will tell, and I'll say to the senior, at the end of the day, you worked hard to get to where you are. You retired at like 70. You've been working all this time. Now you're like in your golden years that you should be enjoying, but yet you need help. And now you're still worried about the kid, and like you need to live. And also, like, if you were to go to that assisted living, that money going to go quick. So they're not going to get the house because you're going to be using it for the assisted, right? But if, even if you're not going to assisted living and you're downsizing, right? And like you want to have the money so that you can leave it, right? Like, enough. Don't, please. Like, live your life and enjoy it and live it in the best way possible. Let's give examples of that, okay? We have a couple over at the Polo Club. Their house is worth $1.4 million. They lost money with Madoff years before, and they were living off it, and now their savings account. And I showed them that they can stay in their home, but they needed, with everything that they had, Social Security, and they had a small pension that they had. And they both were, let's say, 76 years old. And I showed them that they can live off the equity in their home for the rest of their life, receive $3,000 a month. They said, Marty, wait, you got to speak to my children. I love this example. I know this one.
a week later, I come through the door and they start throwing darts at me. Whatever they had in their hand, they would throw at me. They say, you're taking advantage of my parents. And the Fitzgerald said, just listen to Marty. And I showed them that they lost money at one time, not directly, indirectly, in investments. But they had savings account, and they were living off of their savings account to just subsidize their Social Security and a small pension. But I said they need $3,000 a month. And I said to Jessica, I said, can you guarantee your parents $1,500? And I said to Robert, can you guarantee $1,500 the rest of their life? They both turned green. They excused themselves, went into the bedroom, came out a few minutes later and said, Marty, what can you do?
We're good, Marty. We're good, right? Listen.
Wait, I'm not finished. After going through all the details and everything else, showing them what they can do for their parents, they live across the street at the Woodfield Country Club. He's an attorney. She's a psychologist. They couldn't guarantee their parents $1,500. They got kids in college, kids in camp. They got their own club that they got to take care of.
We have our expenses, yeah.
They have the expenses. Now, what I realize, and very few people really write about, is the parents who are in their from 75 to their 80s, they give money to their children.
Yeah.
They give money to their grandchildren.
Yep.
Children don't give money to their parents.
Yeah.
It's an unusual situation. The culture has changed.
Yeah.
There's only, in the last 15 years that I did this, there was only one family that came to the benefit of their parents and said, we will help.
Yeah.
But mainly it comes down to it, do the kids only want the house?
Yeah.
But to give to their parents, very, very difficult. Yet the parents will give and go without dinner to give to their children.
I deal with that a lot, and I even with my own family, I'm like, no, I'm good. Like I'm not like that at all. Like it drives me crazy. Like I enjoy your life. Like you don't have to. Like I'm good. Like you set me up to be able to do what I'm doing, to be able to take care of myself. Thank God, right? But when it comes to these situations, I see it happening. I see, unfortunately, where the senior is putting themselves at, their detriment to protect this, I'm gonna give my children my house and and like Marty's saying, I have so many examples in my head, people, even very affluent people that aren't getting the help they need and using these type of things because the stigma. So the biggest purpose of why I want to share this topic and obviously we're not going to get through all the details and we can't really hone in on all the nuances and the specifics because it's very technical. Like you sit with Marty, work through the numbers, but I just want to throw it out there so people think about it and think about what are your options? What can you do? And also look at the logical part of it of no one's taking your house. You still own your house. And yes, maybe there were predatory type of style loans that existed. And now it is FHA backed. You have MI, mortgage insurance. You're like Marty said, there's no recourse, which means that if you outlive the calculation they had and you're selling it, you only need to get 95% of the appraised value. If you are upside down, God bless you. If you're upside down and you used all that money and made your life so much better over all those years, of course you're not going to walk away with anything at the closing table. Like I said in the beginning, it was a loan, but in reverse, it sat on the back end. So you have to pay, right? You have to pay. And the question isn't are they going to take your house or whatever? You have to look at it logically. How can you unlock potentially for some people who may not have? I had a client Marty helped when they sold the condo, what they were walking away with was a lot less than they thought. And what was a lot less than what they actually needed to get something they wanted. You're walking away with $150,000. That's buying you a condo on a good day. But you don't want to be in a condo. You just sold a condo, but now you're walking away and you want a condo. But so Marty was able to help them. And they can stay in that house for the next 20 years, and they only had to bring that 150, and they're in a single family house, and and they're comfortable and they're enjoying. And otherwise, what was the alternative? You're taking that 150, you're going into a condo. You just left a decrepit condo. You don't want to be in a condo. You want to, So there's so many different ways that I feel even from our class that day, that people were oh, we could do this, and oh, you could do that, and there's just a lot that I think people don't know. So at the very least, have that conversation with someone like Marty and say hey, this is what my concerns are. This is what we need. Or even you might be using it, like I said in the beginning, for a financial play. You could, instead of getting a mortgage for that differential so that you can enjoy your life in that specific community and not have a mortgage payment, you're not going to have a mortgage payment. You're going to be able to live there. And now, yes, the mortgage will sit on the back end. And yeah, when you close, it's the same thing. If you would have bought with the mortgage, people don't realize this too. So if you go into a mortgage calculator, run the amortization table, right? And you take out $500,000 in mortgage, and then you look over the 30 years. Look at how much interest you paid over those 30 years. You bought your house 3 times. Not wrong, right? So that's where I'm trying to kind of flip the script of people's thinking is yeah, you could have had a regular mortgage and paid the interest. So yes, and when you die or pass away and now your kids have it, or when you want to move and you need to move into skilled nursing or memory care, whatever it might be, and you might be upside down and now you're oh my God, we have no money in the house. Of course not. You had to use it. like you used it.
Well, let's talk about people who are in the business world, in today's world, to go into the bank and see if they can borrow money.
Yeah.
Let's say their credit score is low, but they have equity in their home.
Yep.
They can use in the FHA program. You can go up to $1.2 million in value. If you're in the affluent community, you can go up to $12 million in value, using the equity in their home to subsidize their business. Now, let's get to the point: is how is this paid back?
Yeah.
When this is paid back, the family said, let's sell the house. The parents pass away, and the mortgage is coming due. Okay, because once they pass away, that's
You
when
can't keep running with it. Yeah. Has to
However,
come due.
the government, this
Gives you
is a
some
regular mortgage. It's got to be due right away. With a reverse mortgage, the government gives the family a year to put the house together, to fix up the house, to stage the house, to get the most amount of money in the selling of the house. So they're not under a tremendous pressure that they got to get rid of the house within 90 days. They got a year to do this.
That's interesting.
Okay?
Yeah.
So that really benefits the family as far as the house is concerned.
Right.
Okay? Again, as I said, they can use the house for another way for equity.
Yeah, no, it's a great way to use it for equity and to do strategic things. Like you said, if you were a business owner and you can't get that money off the book, from a different way, you have this and you can use that. You can write a mortgage to your business. You can write a note, to your business, pay it back. And then if your business is paying it back, you can pay it back.
Right. At least you're able to keep your business going.
Yeah.
When you have a rough time, as long as there's equity in the house, you can use it. And you don't have to go through the whole process of a normal conventional loan.
Right.
The reverse mortgage is using based upon the age of the individual and the value of the house.
Right.
That's what it goes by.
Is there anything that we didn't cover that you could think of that?
I think we covered everything. There's technical things that we don't have to go
yeah.
over. But the gist is to get the public to understand that it's such a great opportunity for an individual if they're having hard times, if they don't need the money and they want to put X amount of dollars of money aside for home care, they can do that. There's so many
things like we touched on. There's so many different ways to utilize this program.
That's exactly right.
Yeah, and it's not it's not necessarily for everyone. It may not work for your situation, but it works for so many more than that know that it wouldn't have worked. We're opening people's eyes to the possibilities.
For the realtors out there, this may be good for 1 out of 10.
Yeah.
For the individual general public, it may be something. Gee whiz, I'm looking for home care in a couple of years from now, or I need a new roof right now. I mean, the woman who's sitting in a house that doesn't have a husband, is living off of Social Security of $1,600 a month, cannot go into the bank and borrow $35,000 for a roof.
Right.
And what happens is that she's told, sell the house, and you can move into assisted living.
Or downsize, and then it's
they're not
like...
downsizing at that age.
Yeah, well...
They're going into assisted living or independent living when they could have stayed in their home and just used the reverse mortgage for the new roof, for home care, and live their life out the way they wanted to.
Right.
Once they move, depression sets in.
Yeah. No, it's not. It's definitely, that transition is always very hard for people. Some people take it differently. Some people take it better than others. But I think, like we said, it's really about opening people's eyes to the options and possibilities, because not every case is the same. Even as realtors too, I had one where I looked at it and I was like, to list this thing, like they were screwed. Like they weren't getting anything to downsize, and this was constraining them, and they needed more money every month because they lost the income, right? But they're like, okay, we're going to downsize, but we need this, this, and this. I'm like, you're going to walk away with like $150,000 on a good day out of this. Like, there's nothing that I could get you, this 3-bedroom, whatever it might be. So I threw that idea out. And it didn't necessarily mean I had a listing anymore, right? But that was because that was what was good for them. Because at the end of the day, I'm not going to list it and then just be like, peace, go find your place. Like, I'm going to be like, wait, I can't. Let me like talk to you about this. Like, okay, what's the problem? You need X more money, blah, blah, blah. As a realtor, you want to look at the whole picture. I don't like to let my seniors be sold until I know where they're going. No one should really do that. Even you don't want to get into people's business, but you also want to make sure that you're guiding them. It's a process. It's the whole picture to me, honestly. I don't see it any other way, but it may be an option where you can help a buyer buy. It may be an option where you can help a seller not sell because that's their dream. And instead of moving and uprooting and changing everything, you give them solutions, right? And the solution may not always be that you're walking away with a commission.
The main part for me is to find out what is the problem.
Right.
What are they really looking for? That is the main thing. Same thing with you as a realtor. What are they really? You have to listen very closely to the client.
Yeah.
Because they say one thing, but they really are looking for something else.
Yeah.
And that's the main part. That's where realtors make mistakes. Where they're showing them an area that's based upon a price when they really want to move into another direction. And they don't know that they can go into this direction because the realtor really doesn't understand that.
And then they don't end up buying, and then they stay in their house, and then they're literally 5 years later still miserable. I have circumstances like that where they may not have heeded the advice to use what we're offering.
I think we hit on a lot. I think we did
on
a lot of the good topics.
Amazing. You always a pleasure. Tell everyone out there where they can reach you, phone number if you prefer.
Absolutely. They can reach me anytime up until 10 o'clock every night. Only for the fact that I'm licensed in California, Colorado, New Mexico. So I'm licensed in 13 states. And I usually get calls at times in California at 9, 10 o'clock at night.
Right.
So they can reach me at any time at 561-306-1302.
Amazing.
That's email is one thing, but the phone is the right way to go.
Yeah.
I'm from the old school. I want to talk to the client.
I love it. Well, everyone out there, thank you so much. There's so much more that we could talk about on this one, but use this as just a stepping stone to kind of pique your interest. And if you can think of anyone who may benefit from something like this to help them increase their quality of life, help, prevent any kind of struggles they're going through, please reach out to Marty. Don't hesitate. And if you have any questions for me, don't hesitate as well. Hope you got some golden nuggets. Please share, like, subscribe. That's the whole purpose of the show, to make sure everyone can get as much information out there to make the best decisions for yourself and your family. It was awesome having you on this one, and I look forward to seeing you on the next one. Thank you so much.
Thank you.
Question: real estate in California. What the Seriously, can someone help? What's an escrow? What's an ARM? What is an REO? What is pre-approval? Can I get pre-approval? Why is inventory so low? Why are interest rates so high? Oh, interest rates not so high? How low is low? How not so high is right?
Before you go down the road of questions, get expert help at championsofhome.com. California Association of Realtors. Who's your realtor?